Hey, happy Thursday. Hope everyone is doing well. I'm driving, so I'm going to try and do this as safely as possible. I just left a client meeting, second meeting. We call it the discovery phase, where we really start to understand what the long-term goals and objectives are, what their current financial situation is, looking at investments, assets, just seeing where they're at from a financial perspective. Something I see quite a bit, especially in the IT space, is a lot of times the salary and compensation that these professionals get is heavily weighted towards company equity or company stock. And these professionals are very, very knowledgeable. They know their space, they know their industry, they're very, very loyal to their companies. But what they are doing, and we hear this a lot, is they have all of their eggs or a large portion of their net worth in one particular stock, one particular area of the market. And it's extremely risky. When you have your net worth in two areas of the market, you're taking on a lot more risk and you're much more vulnerable to loss. And you have to keep in mind, the reason we invest, the reason we have our net worth invested in the market is to achieve our long-term financial goals and objectives. And again, having one piece of that heavily weighted towards one company or one stock or one sector of the market is extremely, extremely risky. And it makes your portfolio very vulnerable. Companies are smart though. They use equity compensation as not only a bonus structure, but they use it as a motivator. Employees that have stock in the company, they're motivated to do well. They want that company to grow because in turn their stock's going to grow, and I get that. But you have to keep in mind it's not disloyal to look out for your best interest first. And what I mean by that, again, investing is a long-term game. You have to look out for your specific financial goals and objectives, and having so much concentration in the company that you work for is taking on risk and could affect you long term. So you might ask yourself, so Jeff, what is the right mix? How much should I have in my company stock or my equity compensation plan? And that's a good question. Each person's situation is unique. It really starts with the financial plan. So you want to, again, understand for you and your family, what's the long-term goal and objective here? What are you trying to achieve? What are you shooting for? And try and develop a plan around that, making sure that all of your assets are working together to achieve that. Once you develop this plan, you want to constantly review it and make sure that everything is working together to make sure that you're progressing towards the plan that you set out for yourself. And a final component of really determining how much you should have in any one stock or any one asset class is, what's your risk tolerance? So what is your comfort level with regards to the market and volatility and fluctuation? When we build out a financial plan, that's one of the key questions I want to understand is, what's your comfort level? Another component though is, what's the time frame? When do you plan to use these funds? And for planning, we like to back into that and determine, all right, if the time horizon's 30 years or 15 years or 6 years, the outcome is X, what's the required rate of return to get you there? And try and build in and back into the plan that way. And again, having everything in one piece of a stock is just too much risk. A rule of thumb, I would say a safe rule of thumb is no more than 10 to 15% of your net worth in any one stock. Not just your company, just any one stock. Don't have more than 10 to 15% in that. And you should be okay. Some other things to consider though, especially with equity in publicly traded companies and your company specifically, is the taxes. So before you make any drastic changes or sells or reallocate the investments, you want to look at your tax situation and take into consideration things like capital gains or capital loss carry forward, stuff that you can maybe offset. Also, a big thing that you want to be cautious of and look at is, what is your specific company's trading policy? And if you don't know what that is, check with your HR department. But if you're a executive, for example, and there's certain things that you can and can't do, and certain times you can't sell stocks. So you want to be very, very cautious of that, and just know what the rules are around that. Hopefully that was helpful. if you guys have any further questions, if you want to chat more specifically about your situation, I'd be happy to have a conversation. I always put a link below these videos that goes directly to my calendar. Feel free to click on it, and we can schedule 15 minutes or so just to chat and just, again, see if there's anything I can do to support you, or if you just have questions. I'm always happy to answer them. Thanks for your time. Thanks for watching. Have a great rest of the week. Bye-bye.